Good morning, everyone, and welcome to the European crossover webinar. And finally, we made it to Friday, and the dollar continues to remain a bit on the weak side. We'll take a look here. We did go in and see the cable go and pull back. So one moment. Right here, and also a bit of a news that had come out in regards to the EU making their thoughts as far as Brexit come along here. Let's go in and just before we get into the news, we'll just go in and take a quick look at what we have coming up on tap today as far as news, or actually say economic reports. We had PMIs that came out today, and a bit in the red here with the German flash PMI coming in down 2.0 at 53.7. Pretty decent pullback from, look at that, at 56.10 Eurozone PMI. But I'll tell you what, the Eurozone, now it's starting to pare back just a little bit. We've been holding up fairly well, but I thought we might see a little bit of pressure with this quick pull down we saw here in the sterling. We were still holding up relatively well here, but we're starting to pare back. Now, coming into the States, we do have Canadian CPI. Come on, tap at 8:30 Eastern, as well as retail sales. And we do have PMI here, flash, here in the States at 9:45 Eastern. And before we jump into the news, we'll just take a quick overview. We've seen the cable going and pare back. It's still holding up fairly well. We just about nicked our target, which was 33.17. We actually had our bias chart support yesterday at 32.97 here. That's where really the market went to before it pared back. I thought we might get up there and you can see right here to the pip. 32.97. I thought we might make it right up here to that 33.17. Didn't quite make it there. Looking at the euro did make it to its 38%, and we actually jumped up above 18, starting to pare back a bit. I thought we might still be able to even push even a little bit further as we go into the Friday. Then we could see a little bit more additional short covering, but certainly the pullback in cable certainly gave the cash dollar index a little bit of an extra boost. And you're seeing that here. Here's our intermediate target. We didn't quite make it there, almost, which was 93.72. I guess probably fairly close enough. But that was our intermediate target. We're looking for an eventual move, eventual correction that could take us as low as 92.80. Our bias chart support for gold for yesterday going into today was 12.15, and we actually even popped even a little bit higher here. Look at this. And you can see this here. The market kind of run out of gas here in the Asian session, so I guess they made that extra pop all the way up here to 15.80 before pulling back. A decent little pullback it was so far. And just a quick overview before we jump into the news. 30-year bonds continue to remain weak. Now, we did go and see a move up here in the dollar yen. There was a story about the Bank of Japan doing a stealth tightening and caused a little bit of a sell, and that did go in and push up. We finally got that 2-year close above 12.53, so got to give it its due. 12.79 is our level up in here. We'll look at this, but obviously some news that certainly was impactful. And S&Ps continue to go to the moon, regardless of where bonds are at. Dollar CAD continues to remain near its lows with nary even a bounce. We saw this one bounce here, and that was all she wrote. And we're not that far away from this 28.79 to 38%. This is what I thought where we hit when we first took this dip down here. Remember, we were looking to go in and take advantage of that buy area here at the time. Thought we'd come down here, take out these stops here, come down and test. We still have not at this point. Surprised it didn't, considering how weak the dollar has been. With that, we're going to move into the news for a quick overview before we jump into the bias chart analysis for today. Says the Canadian dollar strengthens to a 3-month high as the greenback broadly slides. The Canadian dollar strengthens to its highest in more than 3 months against its U.S. counterpart on Thursday. Like I said, this is at the close of Thursday. The currency, which has been boosted this week by optimism that a deal to renew the NAFTA would be reached, touched its strongest since June the 6th. We're seeing what we're seeing is money flowing away from the U.S. dollar into other currencies, and the Canadian dollar is benefiting from that, says Scott Lampard. This is not a groundswell of support for the Canadian dollar. The gloss is off the U.S. dollar for right now. The dollar index fell across the board as a resurgence in global risk appetite on relief that the new U.S. and China tariffs on reciprocal imports were less harsh than the fear hurt safe haven demand for the greenback. Canadian Prime Minister Justin Trudeau said on Wednesday he wanted to see flexibility for the United States if the two sides are to reach a deal on renewing NAFTA, which Washington insists must be finished by the end of the month. And we've talked about that for political reasons, why they're really trying to push to get that down. The price of oil, one of Canada's major exports, eased, slowing an upward surge that had pushed the market toward 4-year highs after President Trump called on OPEC to get prices down now. Australian dollar heads for the biggest bounce in a year, and the Kiwi not far behind. The Australian dollar was holding for its best week in over a year on Friday as risk sentiment recovered from the latest round of CNO U.S. tariffs, and a major ratings agency upgraded its outlook on Australia's credit rating. S&P revised its outlook to stable from negative, removing the risk of a downgrade to Australian AAA rating, supporting bond prices. Investors have spent weeks shorting the Aussie as a wager on a hedge against global trade tensions and turmoil in emerging markets. The extent of the Au's resilience in the face of the latest phase of U.S.-China trade battles has been a little surprising, says Westpac senior strategist Sean Callow. The recovery in risk assets soon after the news suggests that the phase of the trade battle was indeed priced in, he added, knowing that the commodity prices had also rallied. Copper was on track for its biggest weekly gain in a month, with while iron ore had risen almost 6% since September, or in September. Sterling falls after the EU warns UK of a no Brexit deal. It's kind of funny that this pops up, and we did see the cable pullback here, is because actually yesterday I saw, this is like mid-afternoon, U.S. afternoon, there was a story, and it was showing Macron, and he's facing the other direction away from Prime Minister May, and he's saying, no way, they're not happy with the deal at all. And I'm thinking, wow, look, cable's just kind of sitting here like not doing anything. And that news was right there on the front screen of CNN. And now all of a sudden we finally get this follow through into the next day, essentially. The British pound fell from near 2-month highs on Friday after European Union leaders warned Prime Minister Theresa May they are already ready for a no-deal Brexit if she failed to give ground on trade and the Irish border by November. May is racing to sign up for plans for life after Brexit in March after next year, but EU leaders sharply criticized her so-called Chequers blueprint. The two sides remain divided on over how to ensure the border between Northern Ireland, part of the UK, and the EU member Ireland remains open after Brexit, one of the biggest hurdles in agreement to a Brexit deal. Sterling has lurched higher and lower on almost every Brexit headline in recent weeks, although Friday's drop was relatively measured. We talked about that. Each dip keeps being bought, and we push even to higher prices. And moving on to the dollar, set for the biggest weekly drop in 7 months. The dollar was weakened against most of the rivals on Friday, barring the British currency, as strong equity markets and rising bond yields fueled a rush to buy riskier assets. This is a textbook risk-on behavior in the markets, and though it's hard to find an immediate catalyst, following trade conflict concerns and improving in emerging market sentiment has helped, said John Murray. Premier Li Qiangping pledged on Wednesday that Beijing will not engage in competitive currency devaluation a day after his country and Washington plunged deeper into a trade war. In early trading, the dollar dipped 1/10 to 93.82. Its lowest in nearly 3 months is set for its biggest weekly drop since early February. The weakness in the dollar has prompted investors to unwind their short bets against other currencies such as the euro, and this move may have further room to run, says Manuel Oliveri. And lastly, we'll go and take a look at gold. Gold rises on a weaker dollar and heads for the first weekly gain in 4 weeks. Right now, we have to trade very carefully on gold, and any uptick in the trade tension is bearish. U.S. trade shares should actually improve trade balance in the U.S. and should give more strength to the dollar and gold prices down. Investors have been buying the dollar, believing the United States has less to lose from a trade dispute, but the dollar is weakened this week with investor flows being diverted away from the greenback to its peers such as emerging market currencies. Let's go and move this out of the way, and we'll go on and get right into the bias chart. So coming in today, we had the resistance 1767, and we did get past that. We made it. We struggled. We weren't during the U.S. session. We weren't quite making it here to this 38%. Here was a 67, but as we went here into Asia, and then we kept pushing a little bit higher, we did make it just above the 18 in the early European session. So where do we stand right now as far as resistance? Well, we were able to go in and establish this close above 72, which opened the door for them to continue to push a little bit higher. I think that this euro could have even pushed even much further had it not been for this pullback here in cable, which kind of got the people to just ease back a bit. Where we see risk today, or where's the resistance? I thought there was still a chance that we could have seen a flurry of short covering that pushed us even further. So don't rule that out. Resistance is going to come in right here at 1815. You can see this level coming, these touches. That comes in right there at, there you go, 1815, 14 and a half. With the potential we can push up here to 1838. You know, unless we get now, the only thing I think we can push this higher, the euro may kind of hang around here, is if we get, let's say, a weaker PMI. That's not necessarily to be likely. But when we look at resistance for today, we're going to have to, we'll just go with this 1815. But you have to be cognizant if we hit some short covering and going into Friday. Remember, don't fight the Friday flows. And we've already had a pretty good run here as the market broke out here on Thursday and held its gain all the way. So we're just seeing a little bit of a pullback, but bulls remain firmly in control. So we're going to go with 1815 coming across here. But look, that you have a couple of targets you can go to. There's 1838, which if we get going, don't try and fight this thing. So this market may try and push it here as we go into a close. And a week where you probably have the last of the bulls saying, you know what, I'm going to go on and get out. So let's go with 1815, and this has certainly turned bullish now. When we're looking at for as far as support, well, anyone that's short this market, or if they're trying to short it, is certainly going to be looking for any type of pullbacks to go in and get back to flat, or even for those wanting to go in and buy. This is where you're going to see probably the most volume. Right here, it's going to be 1717, right, coming across. 1716, yeah, 1716 right there, 1716. And if we look at the most recent run that we've had, $16.97 would take us all the way back here at 38%. I don't see that happening right now. I would really go with this 1716 right there. You see that coming across these closes right here? So call it 1717, but we'll stay right there, 1716 for support. Where we could, and I think you may not see that today, but if the euro were to start working lower, I think that would be a downside target where you see people also trying to pick it up for a move back up. So let's go with 1716. So we're looking here on the daily chart. Be very key if we can get that daily close above 1761. We already got it here, but we'd like to be able to defend that 1761 on the daily. If we slide below the 1761 on a daily close, it really opens the door for them to push a little bit further lower. So it'll be important to watch this close. That may be almost like a little bit of a pivot. Let's say that we do dip and then the market's holding. You might see a little bit more further short covering if we're holding just above 1761. So that'll be important right here, 1761 here on a daily. Call it actually 1762. But we're still looking for a move all the way down here to 1716 on the 2-hour chart. Keep an eye on that daily close at 1762 though. Let's go on and move in now to cable. We pretty much nicked this, just about nicked this target that we had, 33.17 to 38%. I mean, if that news story hadn't come out, I think, once again, just like the year, we could have punched even higher with some additional short covering going into the end of the week. But as we talked about yesterday, each subsequent pullback is purchased, and then we end up going to new highs. Where would be support now at this point? Well, let's take a look where we stand with the daily. That's important there. They defend 32.02 on the daily. 32.02 here on the daily. Important for them to defend that. You can see that coming right across here. And let's see where we stand right now. This is about 50 back of that bar. Actually, a little bit more than 50 back of the bar. Well, we'd have to come back down to 31.46 before we got to the 23%. Here's that 31.68, which has been key. That's what we're just going to go with right now. There's some additional support just below that, 20 pips lower, back to about 25 pips lower. I'll actually a little bit further, all the way down to 31.37. This is a good buying zone here if they get a little bit, if we hit some stops. And maybe you might get some, depending on how this plays out, if you get some bulls starting to, give in a little bit. We're going to allow for a little bit of dip beyond this key 31.68. So let's move that right in here at 31.54. And I'll show you right where I'm coming across. You see that right here? Kind of like split the difference. So call it 31.54. Just taking out that key 31.68, maybe on a bit of a stop run. So we'll move this to 31.54. Resistance, well, we had 32.97. That basically top ticked it right there. That's exactly where the market ran out of gas. You can see it right there, 32.97. Resistance at this point, well, if we look on a 30-minute, you can see right there coming in. You see that right there? 32.60. We'll put that for the resistance, 32.60 coming across. It's on a 30-minute. Let's go into the Aussie, which has been up and away. Well, we had taken out, this was actually our bias chart resistance from a couple of days back, the 72.55. And you can see they went straight eventually to the 72.55. They stalled for a bit before asserting themselves, coming back and testing 72.55. And this was our next target. We just went with 73.20. That would be your upside. if the dollar pushes a little bit further lower. Certainly the dollar's coming in right now in a little bit better shape. You can find resistance right in here, which is about right where they ran out of gas. You see right there. But I'll also go with this 73.20 for an upside because if they want to stay bullish, this will be where they will try and squeeze the market to 73.20. So we're going to go and keep this 73.20 right here. And as far as support, same thing here. Let's go and take a look at a fib. If we pull back further, we've got 72.52 as our 23%. And notice that that also happens to confluence with that key 72.55. So we'll go right there with 72.53, which is a 23% pullback. We think that any pullbacks here in the odd, we'll give a little bit more room because we've had such a nice run here in the Aussie. It's going to come in right there. 72.42, 72.42 for support. When we look here, we still have this listed as bearish. Well, we've had a very nice run in Aussie, but this thing is still bearish. So it'll have to do some work before it would actually, we'd have to turn this around and say we're going into a range. Still a lot of work to go and do here for the Aussie, which has fallen essentially from 80 cents basically. So no, it's still bearish. We'll go with now the Kiwi. Nice run up here in the Kiwi itself. We had our bias chart resistance at 66.79. Boy, look at this thing. It's made it almost all the way up here to 67. Here's our resistance, 66.79 right there. And that's where they initially stalled for just a little bit before pushing up even higher. Resistance. Well, they came down this key area here. I mean, they had a pretty good fall before they kind of stabilized. We'll just use this as a short-term level to work a fib off of. So we're actually going to use a 61%. You can see this key level coming across. That is key. That comes in around probably about 67.25-ish. Right there. $67.24. So that's where we believe that this market can make a run. That actually has a confluence with the 61% of that move we talked about. So where would this market potentially resolve itself? Here, 67.24. Look, there's a bevy of resistance here. This whole area, look at that. But where could eventually go to? 67.24. We're at 66.83. It's had a pretty fabulous run at this point. I'll tell you what we'll call right here for today, that resistance, 6704. You can see this coming across these touches. I should say 6705 for resistance for today. Support on the Kiwi. Right there. It's not that far away. Let's pull this further back. We'll move this just a hair above that, just a hair. Called 6640. 6640 here on the Kiwi for support. Things have changed around here for the Kiwi. And we'll take a look where we stand with the Canadian currency. Now, we do have data today here with the Canadian currency. Canadian CPI due at the bottom of the next hour, as well as Canadian retail sales. So some key data, and let's see where things end up playing out at. Actually, the Reuters poll is looking for 0.4 on retail sales. Last month was down a negative 0.2. We do have CPI inflation. The previous month was 0.5, big jump. And we're actually looking for negative 0.1. That'll be interesting because we've made a rundown here with the Canadian dollar. Let's go on and pull this back a bit. Actually looking at it on the 30-minute. Let's move this to our conventional 2-hour. So we have the support here at this 28.91. Now, they never did make it here quite, almost, but not quite, to the 38%, which is the 38% of this entire move of, if you pull this further back, from 2062 or 2262 all the way up here. Actually, 2062 to 3388, so even further back. Pull this here. See this entire move back right there. 2062. And we're looking on the daily chart here. So 38% back will come in at 28.79. And you can see here 28.75's key right here on the daily. So they need to defend that. Certainly gives them a target what they'd like to make a run to if we get some strong Canadian data. We've certainly been under pressure looking here on the daily chart. So this 28.75 fairly key. We know 28.79 is going to be the 38% back. On this whole area here. And potentially as low as 28.42. There's a whole bevy of support. Look here at 28.40-ish. If we get some strong Canadian data. So let's get back to the 2-hour chart. Well, with this data, we certainly have the opportunity to get to not only tag this 38%, but it really put the pressure going into the close of the week. And you can see there's a lot of support coming in here. Right there. We're going to say 28.43. And the reason is because we've got two key economic data pieces coming out. The retail sales and the CPI. And you can see all the touches coming in here. You see that? So we're going to go with 28.43. You got to give some more extra space when you're dealing with tier 1 data. I think if we got down there, you'd see a bevy of short covering because, boy, we've fallen a long way in a very short amount of time. So I think if you did get down here, this 28.43, that'd be a good opportunity where you'd see some short cover. Anybody's short, I think they would use that opportunity to step in and cover a good chunk of their shorts. That might be Joe, but we don't know. I know she trades she's like the loony queen. Let's go and look as far as upside. Obviously, if we get a slide in the data, it would certainly make a big difference. We're going to go right here and give it some extra room. Well, that's probably too much room. Well, this is where potentially we could see a bounce back too. And be 130.11. That's huge though. That'd be a long way back. You know what? Just initially, you can see the touches come across. This is where they probably shoot for initially. Well, that's still a long ways back. That's 130 on this data. Oh, we'll go right there. 29.91. 29.91. Well, we've already had a pretty good run up here to 30.20 before this market paired back, or 30.15. 29.93. We'll go 29.93. But that'll be some big data at the bottom of the hour for the Canadian currency. Let's go and take a look where we stand here with the Swissy. Well, we've had a pretty good fall, and it continues to remain weak. There's some support here, but 61% comes in here at 95.25. Kilo here comes in here. We'll go right here. You see this low when we made this run down here? It almost made it to 95.33. You see that here? Before we saw a pretty good bounce back up here from all the way up to 96.41, so just a little over 100 pips from this area here. Well, that low comes in at 95.35, and then you can see here they went back to this 95. I actually think got down here to almost 33. So we're going to go with that for a downside target, 95.33 in the dollar Swiss, 95.33. I think that would actually present a very good buying opportunity, actually, especially if you're short. But I mean, buying opportunity, I think you'll see some buying coming at that area here, and you see right here and right here. So I like 95.33 here. And that's not that far away. This has come under some kind of pressure. Resistance then would come in right here. 96.06. It's 96.05 and a half. We'll call it 96.06. There we go. It's interesting to see how much this is given up in such a short amount of time. Especially even after the Swiss National Bank made its comments, and then you would think they would probably lose value. Also, the safe haven thing, that's starting to weaken a bit, yet it still continues to strengthen. The Swissy, i.e. dollar Swiss, obviously weakening, but the Swiss currency maintained its strength and then some. Now let's go move into the dollar yen. I mentioned earlier there's a story about some stealth tightening here, and that has actually, now I gotta give it its due here. And I had a short, and I got I think it was what, I may have been off about, I think took a loss for like 20 pips or 25 because I had this 1253. Let me move this back over here. And I kept saying the resistance is 1253 in a 2-hour close. And it couldn't take out 1253, but it was holding here. So did put it right there. And I said, look, if they get to back above it, forget it. And certainly we did. So that's on the dollar yen. So I got to give the dollar yen, obviously, a story now that's, whether how much truth is into it. Here's that key 1279. We're starting to slide back below it. But we had to give it its due as long as it's above 1166. But I think we still should be much higher in light of everything. That being said, we punched up, we got to 1279. That's going to be, well, we have the resistance here at 1279, but this is where the close was, and we'll have to respect that for resistance. See right there, the body close, 2-hour body close is going to be 12, right there, 1284. That'll be the resistance. Support, well, it's pretty clear. It's 1211 on a short-term basis. See that coming across here? And let's take a look where we stand here on the daily. Important that it got above the 1223 and it's kept this and held here. This opened the door. So technically, like I said, still a buy. I mean, it's still bullish. I've doubted it, and it hasn't been able to get past until yesterday. So we'll leave that as it is for now. Moving on now to the dollar index. The market is holding near these lows. Our intermediate target that we've been looking for was the 93.72. Didn't quite make it there. We came close. I thought we'd go down there and tick that there, but it didn't quite do it there. Kind of holding our own now. Certainly the pullback in cable has given a little bit of additional support for the dollar index. And we are above 94 at this point. I'll tell you what, we're just going to stick with this 93.72. If they slide, to see if they maybe make a quick stab below that and try and hold it. So we'll go with 93.72. If we get much below that, then that opens the door for further dollar liquidation, but it's holding. You know, I thought we might see a continued flow going into the end of the week, but it's done its best to hold down here at this area. As far as resistance, I'll tell you what, let's also go and take a look at the daily. Well, that is support here on the daily, 93.89. $81. Let's go and see if we can see anything on the resistance. Here's that 94.09, which it only provides just minor support. I mean, it provides support, but I'm saying on the way down we got above it. On the way back up, let's take a look at here on a 30-minute. See if we can find anything here. Here's that rebound. Remember, we went into Friday and then that carried over into the Sunday session. So let's use that and see if we can find anything with a fib. We're running out of gas here at the 23%. You can see that right there. Therefore, we're actually going to go with right here, 94.13 for resistance. 94.13. So if they go up here and punch some stops a little bit, probably run into some resistance right here at 94.13. Call it 94.14. Give it an extra pip or tick in this case. Let's go move into gold. Now, yesterday with gold, we had our bias chart resistance at 12.15. During the Asian session, they made it to 12.14.80 and it got turned back. But we reassert ourselves here in Europe and actually punched up here and got above the 12.15, just appeared and added another dollar from the high. So 15, the Asian high was 14.80, then we punched up here to 15.80, and just pulling back as the dollar found some support. This 12.15, 12.16 is key on a short-term basis, but where the rubber meets the road on the 2-hour chart, and we've discussed that before, you can see it's 12.19. And we know that 12.19, that's where the market lost its steam a few weeks back. And we covered that in the analysis right here. That's what we were talking about, that 12.19. And we saw the market go about $1.20 above that. and then the wheels came off, and we fell all the way back down to, like, I think it was 1207 or 1206 within that same session. So you can see here a lot of trading going on here, 1214 right there. Spent the most time at 1214. The highest volume was at 1213.5. So once we started to lose that, that's where the market pushed. When we're looking back for support for where they're going to find resistance, you can see that 1213, we're going to go right there, 1214. So we'll actually lower it $1 to 1214. And you can see right here, the most time being spent there, right there, at 1213.80. So we're going to go with 1214 for our resistance. Support has got to be that breakout area we talked about. Once again, that 1207, we'll go with that. It's actually just a hair below. Here's 1206.5. So we'll call it, actually going in, it's really just above 6, but we'll just go with this 1206 on a stab down there. But 1207 was the, we talked about that before, was the daily breakout area. From about a week and a half ago. And that's where we closed just above it. It looked like this market was going to be heading for the stars. There it is. You see right there, 1206.80, and see that mark was holding it, and we got this daily close above it, strong close. It looked like we're going to the moon, and we added on even further, and then we lost it all. And the market was certainly under pressure. So we're going to use that, but we'll list it as 1206. For your support for today. But it certainly looks like we've dodged a bullet here in the gold market. We start out the week, remember saying we were on the precipice of support. We had 1197 as a horizontal support. We had 1197 as a trend line support. And we talked about last week about how this market was a buy going into 1204. As long as we didn't get a 2-hour close below 1197, and we never got a 2-hour close below 1197. We'll see if we can resolve ourselves a little bit higher, but gold certainly has a lot of things to prove before that happens. So let's go and move in now to the bonds. I would have expected at least a short covering bounce, but once again, I guess going into a Friday, you can't fight the Friday flows, and that's the way it's been for the entire week. So I guess anyone who tries to buy, and I guess they're going to keep them under pressure going into the week end. Support will come in right there, 39.29. See right there, 39.29. We had some resistance at 40.16. Market actually, initially it struggled with 16. You can see that here. But we popped just above it to get up as high as 40.22. We're currently now at 40.09. There was our 40.16. we're going to go with this close right there on this 4 hour. It's 40.20. We'll give it a little bit of extra room. 40.20, and you can see that's key coming across here also. 40.20 for resistance today in 30-year bond futures. Certainly retains that bearish bent. And let's go move into the bunds. Bunds are obviously faring better, but resistance is right there, 59.02. Right there. Support's right there. We get a pullback. I'll probably say initially, if you're scalping around, it'd come in at 58.90, but we should find some support coming in far better at 58.83. The DAX has had one heck of a run here. I think probably a little bit of it maybe is the thought about moving assets away from the dollar. But boy, what a nice run we've had back here in the DAX. Wow, we even got past the 38%. Right here, that's going to be resistance. 12,407. They certainly triggered the short covering here. 12,407 for resistance. And we'll just go with the technicals right here. It's 12,280. There'd be a little bit more support coming right there. 12,310. We'll go with the 12,310. 12,310 right there. That should go on and take us to the top of the hour. That'll wrap up the bias chart for the week. We'll put this week into the books. And Blake should be coming up at any moment, probably another minute or so. Euro is.
I'm here, Paulie.
Okay. Hey, Blake, how you doing?
Good. Just was short some euro dollars a little while ago. Just took that off. Yeah, you know, first of all, I'm trying to build a case on why I want to be short the euro, and I already pulled it off, but I don't know. I might reshort it again here in a little while. I think the rejection overnight was pretty key. The failed rally attempt, then you had the Eurozone PMI miss, and it's a big 38% retracement on a weekly basis, and you know, stock market kind of reversed, gold and silver reversed. I was long some gold and silver overnight, and I flatted those out. You know, I picked them up for the squeeze, and then but gold failed at, you know, pretty key levels overnight at the 12, you know, 12.10, 12.11 level, and silver's, you know, struggling to, you know, sustain. I don't know. I'm a little. I think if you're short the dollar, you've got to be a little concerned here. You know.
I think you're right. You know, I think that I mentioned yesterday to you, these markets have been tough for the last couple of weeks, and you made a good point here with the gold, because I saw you in the chat room, you were mentioning about gold at the time, and our buy chart resistance yesterday was 12.15, and the market in the Asian session got to 14.80, and it paired back, and then to my surprise, during Europe, we actually popped up to 1580, and you're right, we ended up giving it all back. And these markets have seemed like they're like 2 steps forward, 1 step back, 2 steps forward, 1 step back. Good cases you're mentioning here with the euro. We get up there and we close pretty solid on the 2-hour close in the later afternoon or early late afternoon, whatever you want to call it, in the U.S. session. So that opened the door for us to move a little bit higher, and higher we did. I think if it wasn't because the cable paired back on that news, I think there was an opportunity for us to even make it up here to, you know, 18.15, which is our buy chart resistance right now, and we could have even seen some additional selling of the dollar, but we did make it in the cash dollar index almost to our intermediate target, which is 93.72. But these markets have been, you know, a little bit tough. By the time you think you're going to get some momentum, you lose the momentum. You know, and I know you were talking about selling the euro late yesterday afternoon, and obviously you came in today and sold it. But yeah, it's some of these markets are between the euro and the gold or something else. You know, 2 steps forward, 1 step back, 2 steps forward, 1 step back. By the time you think the euro is going to go, and case in point, a couple of days ago when the euro was sliding, it looked like, and I put the announcement going. You know, I was bullish the euro at the time, but I was thinking, you know, someone was asking me, well, how far do you think it's going to go on and break? And I said, well, and at the time I was long, and I said, he goes, where's your stop? And I said, I was looking at it, and I said, I was going to move it lower, and I said, that doesn't make any sense. So I said, I know what I'll do. I told him, I said, right there, you see here, a 2-hour close below 1647. You see that right there? Is going to a 2-hour close, and there's a close right there, a 2-hour close below that, and I'm out, because I thought that could open the door for us to test 116, and the euro looked kind of sick, and look, the euro turns around and runs up. By the time you think we might even squeeze further, then we start sliding back. So it kind of makes a case of what you're saying is that, you know, these markets, by the time you think you can get some momentum in one direction, it runs out of gas.
Yeah, you know, I don't know. You know, I'm a little concerned that and one of the other things too, Paul, is the market. Well, I say the market, the Twitter sphere yesterday, extremely bearish the dollar, and you know, as we were going into a key level resistance, and that's always concerning to me when, you know, I've got the majority of people. I put out a lot of tweets yesterday. I actually tweeted more than I probably have in weeks yesterday, and yeah, I had so many people are like, oh, you know, the dollar is going to get killed, euro's going to 120, and I got, you know, the whole market is kind of leaning that way. Hold on. Prime Minister May says she won't change.
I was about to say that.
Act on Brexit. Okay, thank you.
Yeah, and apparently there's going to be a statement shortly as well.
Oh, okay. Well then, we got, you know, Stelios, there's a little bit of an issue here that we might actually start to give back a lot of these gains that we've seen. And I was long the euro pound overnight, and I did really well with it, which has allowed me some flexibility today. I was getting asked earlier, like, why are you shorting the euro? And I'm like, you know, I've got all these other reasons, but I also felt like some flexibility because I shorted the pound. And Paulie, this morning you said, you know, you were looking at the CNN article or whatever. You know, there was a it was a good picture of all the EU members faced one direction and May facing the other direction.
I know, I was surprised, and I will say a couple of things of why it's, y'all should go and try ForexAnalytix. Blake announced in the chat room at the time, I think it was JT said he was thinking about joining you. Blake said, I'm thinking about getting I'm thinking about getting into the euro pound at the time, and I remember I don't ever trade that, or I haven't traded that in years, and I said, and it probably sounded stupid, but I was like, well, that might make sense because the euro is just now starting to break out. And I know that it didn't have anything to do with it, but I was looking against the dollar and I go, well, the euro's starting to break out now and the sterling's already gone so far. So that makes some sense. Yeah, that makes some sense to me. But my point is Blake announced it before he even put the trade on. So if you were there in ForexAnalytix, you had the opportunity to join him on that trade, and he ends up doing very, very well on that trade. But that being said, yeah, I was surprised. I just happened to be flicking around for news, and I went on to CNN.com, and right there on the front page, it was a picture of Macron looking one direction, and it was a group of people, and then May looking the other direction. Macron was like, no deal. And they never mentioned anything about Euro news right on the front page, and the cable didn't do anything. And obviously then it obviously rolled over when the story came out with a little bit more power to it in the European session. Hence now we've seen the cable come under some key support, key pressure. But I will say this is some good support in here. We actually, our buy chart support comes in at 31.54, but this whole area, if you're looking to cover shorts, I think we'll see some demand, at least from short covering. But obviously, if we get some kind of bearish statement, that'll really put it under some pressure. But that's all I got to say on that.
Oh, thanks, Paul. Well, the thing about the cable, and I was sitting there, I'm like, I can't believe, and I was actually, we were having this discussion with the guys in our office, and if you don't know, I trade with Gelos Capital. That's who I trade with, and the guys that I trade with are, it's a very elite group. There are only 6 traders. There's only 6 traders, and these guys have all been together decades, and I'm like the newcomer, right? And they were all sitting here going, man, I cannot believe the cable's not getting smashed right now. And I'm like, my comment was, well, it's just the overall, dollar weakness theme that's playing out today. And, they're all saying, but the cable shouldn't be up here at 133. And I'm like, I don't really think it should be either, but I don't know if I necessarily want to play it being long the dollar. Because I was afraid that the euro might indeed challenge the 118 plus level. So I'm like, okay, well, that could continue to drag the cable up. But I'm like, but what I am going to do is I'm gonna go long the euro pound, because I'd rather play the underperformance of the cable that direction. And fortunately I did, and I made some decent money overnight. But the risks of the cable undoing a lot of these gains, especially if Prime Minister May's checkers plan doesn't go as planned, there is a risk that the cable could trade back through 130 on the downside. And I don't have any cable exposure right now. I'm just saying that that there is that risk, and I'm done playing it with it today, I think, unless there's some huge news that comes out. But one of the other things that I wanted to point out, there's a few things actually, and I'll take over from here, Paulie, and I have to say, guys, if you let me mention this really quick. If you like what Paulie does in the morning, next week is going to be your last week to view Paulie for free. If you're not a ForexAnalytix subscriber, if you're a ForexAnalytix subscriber, you're going to get his morning analysis, and you get all caught up on the overnight session. But it's going to be only for ForexAnalytix subscribers, so just keep that in mind. So next week will be your last week that you can listen to Paulie in the morning. He's a very, and Paulie, I have to mention, you're a very prominent role in our chat room now. You've made yourself a really big component of it, and I want to thank you. I know everybody else in there really appreciates your your active trading style, but B, your input there. So thank you very much for being part of that.